Taxes can feel like this huge looming expense out ahead of us, and it can feel like we can't do any sort of planning to minimize our taxes or to be the most efficient that we can with our taxes. In this video, I'm going to show you how to plan your taxes, or at least I'm going to show you how I go about planning my taxes when I'm doing something particularly related to investing or income generation. Hi, I'm Camille Gaines here, and on my website retirecertain.com I write about and talk about investing. I've been investing for about 40 years, as well as creating alternative income streams over the past 15 years or so after stumbling into early retirement along with my husband. Okay, so I'm not trying to sell wealth management services. I just like investing. I think that making money is fun and investing money is fun. So thank you for listening to my channel. If you like this information, you find you like my video, make sure you subscribe to my channel. Okay, so what I want to show you is the place I go to sort of get an idea for our taxes and also to do tax planning. Now, I'm an entrepreneur, so I pay estimated quarterly taxes rather than having W-2 taxes, having taxes withdrawn from a salary type of situation where income is reported on a W-2. That's what I'm trying to say. So what I want to show you is where I go, though, if I have an asset or an investment, for example, that I'm thinking about selling, and I want to know, would it make sense for me to sell it, and how much would the taxes be if I did sell it? So this is where I come to figure that out. I come here to figure out, would it be better if I have all of my expenses this year, or if there are some expenses I can have in December versus January, such as property taxes. Would it be better for me to do that? What tax rate am I in? What is the tax rate for this year? What does it look like it's going to be for next year? Now, these are not always available, but as we get closer to the following year, we can look and see how much our taxes will be so that we can estimate and so that we can plan and we can be strategic with our money. I like to teach in my investing course to be the CEO of your wealth, because this is a job. It's a huge job, and the job that you do will depend on whether or not you have enough money to live the way you want to live for the rest of your life, and it will determine your income as well, especially once you're no longer employed or a business owner. So this is an important job, and minimizing taxes is important because it can be the largest expense that individuals pay. So we may as well do the best that we can with it. Now, having said all that, I'm not a CPA. I'm not giving tax advice, just like I don't give investment advice. I talk about what I've learned from investing, my own journey. I have taken the federal income tax twice for some reason, but I'm very comfortable with taxes. I deal with our CPA. I guess I'm sort of the CFO of our businesses, and I apply this. So I want to show you the place that I like to go to and the way that I look at this. So you can see here nerdwallet.com. I really like their setup here, and this is the place I usually land when I'm looking at this. So what you want to do is just scroll through. You want to make sure you're looking at the current year, or the year that you're looking at estimating. This will of course change. You might see this video in a year or two from now, and you can still go to NerdWallet. You can also just Google tax bracket and the year that you're looking for, and this will come up. You can look at the IRS table as well. I find the NerdWallet one just very, very friendly, so I always end up here. So here's 2021, and this is late 2022 when I'm doing this. So I'm going to scroll down to 2022, and what you want to do is find where you are. Are you a single filer, or are you a married filing jointly filer? And those are the most common ones, and you'll want to find and make sure you're in the right year and the right type of taxpayer that you are. Okay, so in this case, I'm married filing jointly, so I'm going to look at this one. Now, a couple things I want to point out. All right, so there's a huge jump from 12% to 22%. Okay, and this is where we can really make some changes in our taxes, when we can keep ourselves in this bracket, for example, versus this bracket. That's 10%. And the other big jump, 22 to 24 is not big, but a jump from 24 to 32 is very, very big. And so if we're close here, and I'll show you what I mean in just a second, this is worthwhile, right? This is a really big difference. So, all right, so the way that this works is, for example, let's say that you make let's say you keep it easy, you make $100,000 a year. So you'll come here and you'll find that your income is between this 83,551 to 178,150. So that's where that 100,000 lands. So you're going to pay $9,615 plus 22% of the amount over $83,550. So I just like to get my handy trusted calculator here, and I'm just going to put in here, and I also of course use my spreadsheet as I mentioned, but in this case I'm going to use my calculator so I can be on my video. So we're just going to say 100,000 minus that 83,550, that's 16,450, and we're going to say times 22%, and that's 3,619, and then we're going to add to that 9,615 for a total of $13,234. So that's about how much your taxes will be. Now, I always like to remember this is an estimate because a few reasons. Number one is that this is the taxable income. So you can see right here, taxable income bracket. Okay, so taxable income is your income minus your deductions. So we all have the standard deduction, and some of us have itemized deductions, I call them, so that it puts us over that standard deduction, so we're able to deduct a little bit more. But most people just use the standard deduction. So you can look on last year's tax return to see if you took the standard deduction or if you were able to take other deductions. There's a good chance your deductions will be similar to last year unless there have been some major tax rule changes, or unless you've had some major changes in your life or in your finances. So that's how you can get an idea if you're just looking at your income and you don't know what your taxable income will be. It's your income minus your deductions. So we can see in this example that taxes will be roughly that $13,234. But in this case, what we're doing is talking about looking to see if it would make sense for us to do something in January of the following year versus December of the current year, to see how we can position ourselves so that we're in the lowest, most efficient tax bracket that we can. Now, this could particularly affect someone in retirement if they're looking to make withdrawals from accounts that are that have been deferred, and it's going to incur taxes when they make withdrawals from those retirement accounts. So this is a really, really common issue for retirees. A lot of retirement accounts are funded with after-tax dollars versus pre-tax dollars. So you'll know what your situation is, Roth versus traditional IRA. So take a look at that, and if it is going to throw you into that next tax bracket, if in fact that withdrawal would be taxable and it would throw you into that next tax bracket, that is particularly when that jump is from the 12% to the 22% or the 24% to the 32%, it can make a huge difference if you make that withdrawal in January versus in December. So again, I'm not a CPA. You'll want to work with a CPA or consult a CPA, or a financial planner is also a good resource for this. Many financial planners offer hourly advice, and they're very, very good with taxes. I'll try to get someone on here for an interview with them so that they can talk through this with you. In fact, if you are such a CPA and would like to be interviewed, then please leave that in the comments below. I'd love to connect with you, and you can provide some information on this as well. But this is how I use this information in thinking about whether I want to make a withdrawal or do something that would create a taxable event. So this is what I do when I'm considering something that will be a taxable event. It will trigger my taxes. This is how I look at it and make a decision of whether it would make sense for me to defer this a month. It's only a week, really a day, a few days, if the holidays are in there, versus doing it this year. It can make a big difference in the taxes, and it can also make a difference if I'm paying it immediately versus a year from now or 6 months from now if I'm paying quarterly. So this is how I use the tax bracket to help me in planning taxes, and I hope that this will help you to plan your taxes. Thanks for watching, and remember, retire certain.